Hello friends, welcome to Akulmach Live. My name is Chandrakant. Today we want to discuss a very important subject which is related to our country, our tax regime, and it is about GST. GST have been implemented since 2017, but still there is a lot of confusion. There are a lot of new business people who have joined the fray, and we thought that it is important to explain the GST and how it is calculated once again. So, in today's session, we will be discussing global goods and services tax, how it functions, and we will also discuss the legal aspect, the legal implications of something new which has happened from 1st April 2021. Before we start our discussion, a word on our giveaway. We have some unique Akulmach memorabilia which will make you look outstanding. The graphics on these corporate gifts are based on the global best business practices. To become recipient of one of these gifts for free, you have to watch this video till the end and provide your valuable comments. Or you can also share your experiences. The person who makes the best comment would be chosen to become a recipient of these beautiful Akulmach gift, absolutely free, delivered to your doorsteps. The winner would also get a chance to be invited live as a distinguished panelist during our next video. What are you waiting for, friends? Please subscribe Akulmach and smash that like button. Now let's get back to our discussion. Hello, friends. Let me introduce my guest today. His name is Bhatt. He joins us from Ahmedabad. He is a very popular, very intelligent advocate practicing in Ahmedabad High Court. So, without further ado, let me present Jeet to you. We will be discussing about GST today in our show.
Hello, Chandrakant. Thank you for having me on this show. Hi, Chandrakant. Thank you for having me on this show.
Yes, pleasure is ours. I think, Jeet, what we are looking for today is from the legal standpoint. Uh, First of all, I think many people don't understand the GST when it was implemented, and there has been a lot of confusion. So you can actually clarify the GST laws and also how it is beneficial for everyone, how it is beneficial for consumer as well as for the retailer as well as for the stockist and manufacturers. Over to you, Jeet.
Yes, Chandrakant. In fact, before starting with GST, I may just give you a brief background of what are the taxation system or the tax regime in this country. Basically, tax is either a direct tax or an indirect tax. The direct tax examples, if I may give you, is that the income tax, which the person is paying directly to the authority imposing the tax. So income tax is a form of a direct tax. Also, what is known as the securities transaction tax, which is known as the security transaction, which is involved in stock trading. So that is the another form of a security transaction tax, which is directly paid to the authority imposing tax by the individual. And the third is the capital gains tax. These three components, capital gains tax is again could come from the sale of property or from investments that is on their return. So capital gain can be long term or short term. So income tax, security transaction tax, and capital gain tax form the direct tax system. And similarly, the other is the indirect tax. So they are imposed on income and profits, and their indirect tax are levied on goods and services. So the GST regime, which has been implemented from 1st of July 2017, is a form of an indirect taxation system in India. Now, along with GST, there is also known as customs duty, which is levied on purchase which is made from a foreign country or it is imported. Then the importing agency has to pay the customs duty on it. And the third form of an indirect taxation is the value-added tax, which is a type of consumption tax imposed on products whenever its value increases throughout the supply chain. So it is imposed by the state government, which also decides the VAT percentage on different goods. So these three sort of systems are indirect taxation, that is GST, custom duty, and value added tax. But before the GST regime, and I will also point out how this GST regime came into existence. But before the GST came into existence in 2017, there were several central taxes as well as state taxes levied on the goods and services. And there was not a one regime, which has now been replaced by the GST, which says one nation, one tax, and one regime for the entire taxation on goods and service. But before GST, the central taxes were the central excise duty, the additional duties of excise, the additional duties of custom, the special duty of custom, special additional duty of custom, the service tax, the cesses and surcharges, insofar as they related to supply of goods and services. So these were the so many central taxes which were charged on goods and services. And there upon them, there were also state taxes like VAT, the central sales tax, the purchase tax, luxury tax, entry tax, entertainment tax, taxes on advertisement, taxes on lotteries, betting, gambling, state cesses and surcharges, and insofar as they related to supply of goods and services. So these all different forms of indirect taxes are subsumed and are now become one GST tax regime. So therefore, this regime clearly makes one nation, one tax regime. So it eliminated a host of indirect taxes such as what I mentioned before. And therefore, it is certainly a very beneficial system in this country. Now, how this came into effect and when it started, when the talk started, was that in the year 2000, the government first set up a panel of drafting committee for drafting the goods and service tax law. But it took 17 years for the law to evolve, and it was finally implemented on 1st July 2017. But why it took 17 years is because it was not easy to bring, because it required a constitutional amendment before the GST Act could be implemented, as certain aspects of state tax and central tax, which are in the state list and the central list of the Constitution. So it required a constitutional amendment, and a constitutional bill was presented first on 22nd March 2011 in the Lok Sabha to operationalize the GST and enable the center and state to make laws for levying of GST. But however, the bill lapsed with the dissolution of the 15th Lok Sabha. And thereafter, on 19th December 2014, the Constitution 122nd Amendment Bill 2014 was introduced, which was subsequently passed in the Lok Sabha, and thereafter in the Rajya Sabha, it also passed on 3rd August 2016. So since thereafter it became the constitutional amendment was accepted, and on 2017 we had the GST Act, which was implemented from 1st July 2017. So now let me speak about the effect by giving an example how this benefits, because as as I already pointed out, that there were several taxes which were levied by the center as well as state, and they had a cascading effect, which is also known as tax on tax. So which ultimately resulted into the cost of the product or service being increased exponentially, because you are paying taxes on taxes. Now this is being done away by this GST regime. And to understand, let us take an example of say production of a t-shirt. So for production of a t-shirt, first the manufacturer will have to buy raw materials. So initially, before the GST regime, the manufacturer would have to pay VAT on the buying of raw material. Now, then he would manufacture in his factory, and suppose the buying raw material costed rupees 100, and say, for example, the tax of VAT was 10% on that state, then he would be paying 110 rupees, as 10 rupees as tax and 100 rupees on the raw material. Now he would manufacture the t-shirt, which would cost him, say, rupees 40 per t-shirt. So there are on the manufacturing, he would also have to pay VAT and excise. So now 110 plus 40, which comes to 150, he will have to pay VAT and excise. Say again, it is 10%. So that will again increase the cost from 150, if you calculate 10% is 15. So 150 plus 15 is 165. Now this 165 is includes tax on tax, because 165 also includes the 10 rupees of VAT which I paid on the buying of my raw material, as well as the 15 rupees of tax on manufacturing of the t-shirt. Now again, I will send this to the wholesaler or warehousing, who will again charge me VAT at the rate of 10%. So now the wholesaler will also increase its value by, say, uh, 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 boxing it or labeling it, and he would charge another 40 rupees. So on the entire amount, again, he will charge VAT. And then it will finally go to the consumer, who will get this at, say, more than rupees 200, 250. But now with this GST regime in place, what happens is this cascading effect of tax on tax goes away. So if 100 rupees raw material I buy and there is a 10% tax to be paid, and then I manufacture it, which costs me 40 rupees per t-shirt, but I don't have to pay tax on tax. So I don't have to pay at 110 plus 40, 150 plus 10%. I only have to pay on the amount which is increased. So therefore, it is an extremely beneficial system where ultimately the cost of the good and services decreases. So this is the main advantage of this GST regime, which has been introduced from 1st July. And there are three components of GST. One is the IGST, CGST, and SGST. That's the central tax, the state tax. And in case of sales of goods or services between two or more or intrastate, then integrated GST is applicable. And if the sale is within a state or intrastate, then central GST or SGST, that is the state GST, are applicable. So these are the three components of GST which are applicable. And certainly, I would say GST is extremely beneficial, and it is better than the earlier tax regime which India had.
Well, Jeet, thank you for explaining this in very nicely and quite self-explanatory. And you have actually given an example of a T-shirt. So, for the benefit of the viewers, let me also summarize, saying that from manufacturing, in fact, even before that, there is a raw material being shipped out to the manufacturers, and then there is a process of a T-shirt, and then shipment of T-shirt, supply chain, and eventually it reaches the buyer. And when buyer actually buys it, he pays the entire tax, which is GST applicable on that product. Say if it is t-shirt, probably it is 18%. And now once the buyer pays 18%, then rest of the other entities which are involved in producing this t-shirt, their tax will be nullified, because the ethos of the government is that there will be no double taxation. And since tax has been paid once in the chain of events, then there is something called input credit. So I think my next question would be to understand this input credit more from you. Can you explain to our viewers what is this input credit?
Yes, Chandrakant. So input tax credit, which is also known as ITC. So for every purchase, there will be an input tax credit, but for every sale, there will be an output tax. So when the ultimately the purchaser purchases, uh, so that is ITC, which is known as input tax credit. When input tax credit is paid, it can be set off against the output credit. So what happens is there will be a lot of chain of sale and purchases, and ultimately this input tax credit can be set off against the output tax. So therefore, yes, those in the chain who are paying and getting the input tax credits will get this benefit of set off, and this is known as the input tax credit and the output tax, which benefit can be availed, and it's there in the software itself, where it calculates this and ensures that there is no double taxation, or there is no extra tax that is being paid, and the benefit of input tax is given to those who are having the input tax credit.
Excellent, Jeet. I think this is very good for businesses, because now they don't have to really worry about calculating multiple taxes. In the past they had to do, there is a sale tax in certain states, there is VAT in some other states, especially when you look at the medicines. The medicines are being produced in Tamil Nadu, but they are being sold across the country. And whenever there is a shipment transferred from one state to other, by the time they reaches a far flung points in the country, from Tamil Nadu to, say, for example, Rajasthan, they would have crossed multiple states. And every time they cross a border, there used to be an octroi, and that could have escalated the price of simple things like medicine to almost 300 to 400%. And I'm actually seeing this happening right now. The medicines which were which we used to spend something like 2000 rupees before 2017, now the same medicine costs one fourth, almost 500 rupees. So things like that, I think it is a good benefit for the citizens. Also, it also reduces the cost for the consumer, because when the businesses are not charging so much, and things are being done transparently, that means everything is being done digitally. There is nothing called extra burden of profitability on each product, because it will be very evident. Somebody is while the business has freedom to charge the premium, but they will be outpriced when it reaches the market, so nobody will buy expensive stuff. So I think things are being done very transparently. How much is the cost to business, how much profit they are making, how much GST they are paying, how much income they are making. So all of these things are digitally controlled now, and I think it's a great initiative by the government. But I think this is very complex stuff. From your point of view or your opinion, how this whole system across India with 1.2 billion billion population, how Indian government would have achieved it? Do you think they have some special systems installed?
Well, the certainly it's a very challenging act to be implemented, and the government is doing its best to implement in the best way possible. And certainly there would be some teething problems also while implementing such a big initiative. But though there are problems, but I think the way they have managed to implement it is laudable. And I think they have these systems in place, checks and balances, and also the softwares and facilities that ensure that proper implementation is done of the act.
Yes, Jeet. In fact, there are some new changes also happening around GST. Not really around GST, but actually, how do you do your billing? The Indian government is now tying up with the global norms of standardizing various commodities, and they are codified. So I think from 1st of April, all businesses need to codify their produce, their offerings, and that number has to be present in your invoice along with the GST number. So the whole rule is that the GST number should be mentioned very clearly on your bill, and also your customer GST number should also be mentioned on the bill. Otherwise, government will not be able to give you input credit. So I think this is one thing that the businesses have to keep in mind while generating invoices. And there are also multiple schemes under GST. Would you have any view on different types of schemes which are there? Under which the businesses can register themselves?
Well, actually, what you said about the implementation from 1st of April, yes, so there is a four-digit code uh, for for those who are having less than 5 crore of turnover, and then six-digit code for those who are having more than 5 crores of turnover. And that will have to be mentioned in order to ensure that the benefit of input tax credit is availed by the service provider, good and service provider. So they are coming out with a lot of different schemes, and I think they have streamlined the entire system quite a bit now, and it is being implemented in a very positive manner.
Jeet, there is different programs being run by government, and you have a. I mean, if you are below 1 crore or lower number, and if you are a retailer, then there is a scheme where you can actually have a composite GST scheme, where you actually do not collect GST from the customer. Or if you are in a normal GST scheme, then when you raise an invoice, the GST is collected on the value of the offerings that you are giving them. So there are two different schemes under which people can register. When you are registered in composite scheme, then the onus of paying GST lies on the business. That is one thing. And I think for the benefit of viewers, I'll also like to tell you that if you raise an invoice, the GST has to be paid by 20th of the next month, and that is very important. Otherwise, government will basically charge some penalties on you. So I think we have learned a lot today, Jeet. Thank you so much for finding time and discussing this very important aspect of our society, of our business, because business is running the country and also generating taxes for state governments as well as for the central government to run our country itself. So thank you so much, Jeet, and we will catch up in the next episode of Legal Matters.
Thank you, Chandrakant, for having me.
Bye bye.